A very warm welcome to IDFC FIRST Bank presents Leaders of Tomorrow Season 11. I'm Ritwika Gupta, and today I'm in the city of joy, Kolkata, bringing you highlights of our recently concluded Kolkata Springboard. On the show today, we have Chaitanya Suvarnam, Managing Partner, Startup Banking, IDFC FIRST Bank, talking about Kolkata's business outlook and more. In the second segment, I'm chatting all things money with Mohit Beriwala, CEO, Shree Rama International, and founder, Shree Rama Managers.
Kolkata is ushering a new era as it emerges as the rising hub of India-ASEAN connectivity. Behold the trilateral highway seamlessly connecting Kolkata to Bangkok with promises of strengthening economic ties and boosting global trade.
Thanks Ritwika, and thanks ET Now team for bringing again, one more time all of us together, and in a way, ET Now time, is encouraging entrepreneurship across India. We are, as IDFC FIRST Bank, we are always very happy and proud to be associated with Leaders of Tomorrow and ET Now. Good evening, ladies and gentlemen. And, so when I was asked to speak and present IDFC FIRST Bank in this event, and today's theme being Kolkata being the rising hub for economic activity in that sense. Kolkata has always been, a great source of inspiration for probably the whole country in terms of intellectual thought leadership, but in economic sense, in the last 25-30 years, somehow that got blighted. So I was thinking, what make economies rise? So, IDFC FIRST Bank, if you all know this story, we started in 2015, when IDFC got banking license. By 2018, predominantly IDFC was a corporate bank with 75 to 80% of our balance sheet being corporate assets. And then somehow the board sensed that opportunity is more in the retail segment of the bank. And then it wanted to be, it wanted to actually in startup sense pivot itself. So it realized that it's important for the bank as a large bank still to be flexible and change to retail segment. Then it started looking for someone who can lead it. That's where this merger happened between IDFC FIRST Bank and that time it was IDFC Bank and Capital First. And then the new management has taken over. And since merger, thanks to God and thanks to great customers who trust us, it's been a fantastic story. 2018 we were 75% corporate. Now balance sheet is more or less 75% retail segment. 2018 we were probably around 2% NIM, and now it is close to 6%. The CASA ratios have improved, and broad balance sheet at 1,71,000 crore is really solid in terms of its NPAs, its capital adequacy in every way. But what has made this happen? How did this transformation in last 4 years has happened? That's because IDFC FIRST Bank, always keeps in mind, a challenger to status quo positioning. So when we took a step back in 2018 and thought okay, what needs to be done? How is banking sector today, and how can we make life better for all the entrepreneurs, startups, and crores of our customers? So we thought still banking sector in 2018 had lots of things to improve. I will give you a couple of examples. Any of you have spotted any bank charges in your banking account, right? All of you might have, right? At some point, banks charge 200 rupees, 50 rupees, 100 rupees. So when we looked at banking segment, there are some 28 charges that banks keep on levying. If your check gets bounced, for whatever reason, as a business, sometimes it happens. If you want an account statement, they charge something, right? We thought, let's be transparent. Let's make our money when, where it's very, banking role to make money in terms of net interest margin. But let's not charge these, small fees. So what we did was, we took a very courageous decision that time. 28 charges that banks commonly levy, 0 charges. So if you have an account with us, your account will not be touched for any, routine servicing issues like that. Again, another example. Any of you have credit cards? All of you, I'm hoping, in this room definitely will have credit cards. Yeah, thanks. So all of you, you are using credit card. For whatever reason, if you fall due on any of your credit card payments, you all know what is the interest rate you pay, right? Typically 35-36%. That's what banks charge. Again, we asked our question to ourselves: why should that be the case? If you as a customer, sir, if you take a personal loan, which is again another type of loan, an unsecured credit on your name, you will be charged around 9%, 10%, depending on your CIBIL score. But if you fail to make payment on credit card on the due date, why should it be 36%? So we took again in a courageous step. We said, let's link credit card dues, interest rate, APR, what we call, to the CIBIL score. So as a CIBIL score, madam, if your CIBIL score is, let's say, 720, and the interest rate according to that on a personal loan is, let's say, works out to be 9.5%. If your credit card falls due, you will be charged 9.5%. Right? Again, a great innovation. But these are some things that we challenge the status quo. We were like, not, okay, this is great. This is obviously, a one-step improvement. But then we thought, what really makes, really the MSMEs and startups happy? As an MSME, your most important resource at an early stage, are either money, of course, and time. So you all have current accounts with some or the other bank. And then we thought, like, if money is so important, how can we make our customers earn money on their ideal funds? So this is really a courageous step for any bank to take, because you all know that bank current account deposits are the key source of profitability for a bank. But we said, it's not about us, it's about the customer. Let's take a customer first approach. And we got a product, something called Car Booster. So what we said was, if you as a IDFC Bank customer, you have money in IDFC current account, your money will be swept out into an FD, and it keeps earning interest. Tomorrow, if you give a check for, let's say, 590 rupees, it will only 590 rupees will be broken, and the rest of the amount will continue to earn FD interest. This, is, of course, it's there in many banks, but somewhere, it's there in the bag. Banks usually don't take it out of the bag when they approach a customer. But we thought, let's aggressively pitch it to the customer, because not because it is good or bad for us, because it is good for the client. Let's take customer first approach. So having innovated on processes, not charging things, products, but then we thought future is not about products or process, right? Future is about banking should be futuristic. What we mean banking should be futuristic? Technology is defining 21st century, surely. The way we know everything, be it commerce, be it everything is changing because of technology. So we thought, let's bring the technology to banking. So in last 4 or 5 years, any technological innovation that you would be reading in the newspapers, be it ONDC, for example. ONDC, everyone is hoping that it will change e-commerce, as we know it, like how UPI changed payments. So, having given this background, how does it matter to you, right? Today is not about IDFC FIRST Bank. Today is about how Kolkata is poised to, grow. So, how, of course, connectivity, this road, 3-4 years down the line, when Myanmar also sets its piece, definitely will bring two, good economies, thriving economies together, and, a lot of you in this room will be finding your suppliers, your clients from Bangkok, from Myanmar, that will do great for thing. But should we wait for 4 years, right? This is technology-driven, times. Already Kolkata is connected to the world through digitally, right? Most of the commerce happens digitally. Of course, physical, movement of goods is important, but digital commerce is actually defining the way. So, we thought the time has already started, right? Kolkata is already poised to rise. And specifically now speaking about startups, I would just give an example. All of you must be reading how startups are raising funds at some point, or how new unicorns were minted, a couple of years back, all that. But then we asked, like, is that what we want to, be satisfied with? We said no. There are about 1 lakh DPI registered startups, about 3,700 of them in Kolkata and West Bengal itself. There are about 10,000 DPI registered startups in East region. let us support all of them. So our interest is, of course, we support the unicorns of Bangalore and NCR and Mumbai, but we have specific interest in supporting the startups of Kolkata region. You'll be really surprised at some of the clients that we have, in East region. Probably when you think of a place like Guwahati, right? You think of probably a D2C company can come from there. Of course, we are all proud of the Wow Momos brand emerging from Kolkata. D2C brands can emerge. But then let me give you an example of Drone Techs. Drone Techs is a startup based out of Guwahati, a deep tech startup. And unique thing about them is they sell their drones, heavy technology and long distance drones to Indian Army. Today in Srinagar, only drones that fly on behalf of Indian Army are Drone Tech drones. And this startup is based out of Guwahati. Again, Flutter, another startup from Kolkata. They are changing the way dating happens. They are bringing lots of vernacular, segment orientation to dating. My 3D Meta, again another example from East region, Kolkata. They are into 3D printing, and these are all really changing their segments. So the point I want to leave is we already see lots of segment-defining startups in Kolkata, in Guwahati, in Shillong, from Bhubaneswar, from Patna, and we are proud to be associated with the startups at an early stage. And wishing you a lot of success and luck for Kolkata region to rise. IDFC will be really happy and be proud to be associated in that growth. Thank you, everyone.
It's time for a quick break. Here we'll be back shortly. Stay tuned. Welcome back to IDFC FIRST Bank presents Leaders of Tomorrow Season 11. You're watching highlights of our recently concluded Kolkata Springboard. In this segment, we are talking all things money in our welfare segment. Listen in. How do we seek funding? When is the right stage to seek funding? How do I approach an investor? And what should my, financial portfolio look like when I do that? What is your take on that?
Hi, welcome over here. Couple of very interesting things. Of course, raising funds. It's almost a very difficult thing. The first and foremost thing any outside investor will ask is, have you got product market fit? Now, of course, you could Google it up. There are various definitions of product market fit. But my belief of a product market fit is that when your product, you're getting revenue on your own and customers are raving about your product. अरे आप कहाँ थे? Where were you? मैं आप ही के लिए wait कर रहा था. That is what I call product market fit. The second you've got it, please go and raise funds. Investors would be lining up to give you money.
What's your take on, how do we strike a right balance, between, profitability and as well as, having sufficient funds, for a rainy day?
Absolutely. So entrepreneurs have this daily grind. What should they do? Addition to that, when they've got money, should they reinvest into their own business or take it home and use it for themselves? What generally we recommend entrepreneurs is use a very simple thing. If the payback period of the project is pretty low and you're getting a high ROI, which means the money you invest, it will come back sooner or later, as fast as possible, please invest in your own business. It's like walking a tightrope, you have to do that. Additionally, you can't put all your money into your business. Of course, you have to survive as well. So start looking at creating passive income cash flows.
Okay. And, for example, say a business landscape that's very unique to Kolkata. What advice would you have for entrepreneurs present in the audience today, for entrepreneurs who are in Kolkata, in terms of navigating the local business landscape, the local financial landscape here? And what are some investment opportunities that are specific to Kolkata as a city?
Well, the world is getting flat. We earlier had startups raising money only in Bangalore or perhaps even in Silicon Valley. But now we are seeing startups raising money over here in Calcutta as well. Recently, IDFC FIRST Bank mentioned about 4 startups which have done really, really well from Bengal. So I don't think there is something unique that you can't not get funds over here. Having said that, our previous speakers mentioned about the uniqueness, the strength of Bengal, which is tourism, agriculture, perhaps light engineering. On these facets, if we focus, of course, growth is there and money should be available.
Absolutely. Now, you mentioned tourism, but I think Kolkata is also known for arts and culture, and there are a lot of entrepreneurs in the creative sector as well. Tell me, what would your advice be for the creative people here, when it comes to managing their wealth, especially entrepreneurs who are dealing, with the creative sector?
Well, entrepreneurs in creative sector will have a yin and a yang thing. Their money source, the cash flows are really, really volatile. So what should they do? They should ideally create passive cash flows, make sure that their rainy day fund is set, their emergency fund, insurance plans, all of them is set, so that if money dries up, their cash flow takes over, investments take over.
And are there certain do's and don'ts for entrepreneurs, when they are starting off, the ones who are just starting off their businesses? Is there a checklist, that you would like to recommend in terms of the certain, in terms of managing their financial plan and coming up with strategies? Is there a checklist for them to consider?
I think if I have to say this, you could say 3 stories, which I'm sure everyone remembers. First is, you've heard of ant and the grasshopper, right? The ant works all summer, saves for the winter. So likewise, you need to make sure that you're not just saving money what's left after spending, rather spend money what is left after saving. So remember ant and the grasshopper. The second thing you should remember is white ant, which termites when it goes to furniture. For whatever money you have, please remember there is inflation, which is almost 7-8%. There is income taxes. Make sure whatever your long run wealth is, it's growing faster than inflation and taxes. Maybe look at equities, real estate investment trust, of course, those things. Third, and very important, you've heard of rabbit and the tortoise race, right? Slow and steady won the race. Please do not go for these option trading, F&O, crypto, penny stocks, all these get rich quick fails. Do not go for that. So if you follow these 3 rules, you are set.
But Mohit, tell me, when is the right time to start investments?
As long as you start earning money. Warren Buffett started at the age of 10. So he's still investing and he's making billions of dollars.
So start as long as you have money. Okay, that's a very, interesting tip. Now moving on, let us talk about taxation. We spoke about, seeking funds. We spoke about how entrepreneurs can navigate the, landscape here. Talk about taxation. So, are there any tax saving, strategies that you would like to suggest entrepreneurs in terms of how they can best navigate the taxation landscape?
Well, you have the new Government of India regulations where Startup India gets income tax benefits. Addition to that, the government has now increased the income tax slab. So up to 7 lakhs of income, there is almost no tax. Addition to that, you can use corporate NPS. If you have any company, whether it is a one-person company, private limited company, partnership firm, any firm, whatever salaries you pay to yourself or to your key employees or to any employee, the employer contribution is completely tax-free. So use the Government of India schemes, make sure you're saving taxes. Remember the second story in fact, white ant and furniture. Please make sure your money grows faster than inflation and taxes.
Mohit, talking about financial literacy, there's a lot of, that's said, on the internet, on social media, that aim to create financial awareness. But, often, the right resources, the right tools aren't available. So for people seeking, financial advice or financial, resources, where would you recommend, they actually take or seek advice from?
First, of course, if you get finally a good trusted financial advisor, go for that. In case you don't, make sure there are 2 resources which you should really, really get. First is SEBI has investor education information online. You would get every information available. And the second, and probably this is all relevant, just use our common sense. Of course, the ant and the grasshopper story. White Ants and Furniture, Tortoise and the Hare. This is something intuitive. Don't go for quick rich schemes. I don't need to tell you this. You intuitively know it. Don't allow greed and fear to come into your mind. SEBI registered, SEBI sites, trusted financial advisor, and of course, common sense.
Okay, so Mohit, my final question to you. I know you have also, answered this in some way in the beginning, but from an investor point of view, right? What does an investor look for when they're actually considering, investing in a startup? Just for that, just for the information, in terms of when an entrepreneur goes to seek funding, they should know that this is what an investor would be looking for in terms of healthy financial numbers. What can you tell us?
Okay. Two things. First, I will tell you what should an ordinary investor, especially an entrepreneur, do. And second, I'll tell you about startup investing. The first is, what should an ordinary investor do? Your business is already struggling. Come on. You've got time. People are working from 10 to 6 or 10 to 7, but an entrepreneur is working 24/7, 365 days. Life is tough. So first and foremost, create your protection and ready. You should have term insurance, medical insurance, emergency funds. Create goal-based planning so that your kid's college, wedding is taken care of. And third, create passive income for yourself. Coming to an investor, if you were asked to invest in a startup, my IMB friend just asked me in the afternoon, he wanted to invest some money, he asked me. So I'll tell you what are the 3 ways and 3 reasons only then you should invest. First is, you know the person and boss, aag laga dega. This guy is driven. You could see it, you could smell it, and he's going to be successful. That's the one reason we should put in money. Second, if I am in the wealth space and I see something which is related to my industry and I understand the space very, very well, then perhaps you may invest. And the third reason is, if you are a family office or an institution where you analyze and invest in hundreds of startups, then do it. Other than that, it's not for you. The best startups will go to companies like Tiger Global, Accenture, all those guys. Ones who are not able to raise money from them will come to you. Don't do that. Fall in love with your own money and not in with the glamour of it. So this is my take on investing in startups.
Well, thank you so much, Mohit. Those were really some fun anecdotes and pretty interesting conversation. Thank you so much. With that, it's a wrap on this edition of IDFC FIRST Bank Presents Leaders of Tomorrow Season 11. We hope you enjoyed the episode. Thank you for watching. Goodbye.